Hey everybody, welcome back to FSP Forex Stock Predictions. Hope you are all having a great day. I am the Vortex Trader, and today I want to show you guys how I go about finding and trading order blocks on Euro USD in the 4-hour time frame. So without further ado, let's just jump right into it. All right, guys, so this is the 4-hour chart on Euro USD. There is nothing on the chart. It is a naked chart. We are using price action to find our entries, okay? What do we need to do in order to find the perfect order block entry? Well, there is no such thing as the perfect order block entry. But if we use price action to help us find our entries, we can sort of filter out all the nonsense and try and find the best possible setups to suit our strategy. Now, this is not knocking the guys out there that use indicators for whatever strategies they are using, but for me personally, when it comes to order blocks, I simply like to use price action. All right. Now, if we switch to the daily, this is important because we need to establish a bias. We need to establish a reason as to whether we are going to be looking for long positions or short positions. Now, on the daily time frame, we can see we have been trending upwards, right? Clearly. This means that we are looking for long setups. Why would we look for short setups when we are going upwards? That would be counter trend trading. Now there's nothing wrong with that if you can find a good enough reason to get into a counter trend position. But for me, if I am looking for an order block, I need to be on the right side of the broader trend. And for this is clearly an uptrend, right? This is a bullish market and has been since September last year. So now that we have established our bias, let's jump back into the 4-hour time frame and see how do we find our entry. Okay, so we are looking for points on the chart where we can clearly see resistance that has been tapped multiple times, at least 3 times. All right, at least 3 times. Now there are a lot of these regions right here. For example, I can put this region over here. This is clearly a resistance line. All right, now it doesn't matter if price pushes through and wicks through, that's okay, right? It's still a zone or area of resistance because we can see price bouncing off that area multiple times. Okay, there were not any order blocks there in this region that I found, and this was last year in December. So for the sake of today's trade, and guys, this is a trade that I did jump into yesterday, and it was a successful one. So as it stands, on the 1st of February, we are up 2% on the account, which is great. There is still some ways to go before the end of the month, but as it stands right now, we are up. Right, so what are we looking for? We are looking for an area of resistance, right? A place where price touches a certain point on the chart that keeps getting rejected. This is the zone that I am looking for right here. Now we can see that price got rejected off of this zone once, twice, thrice, 4 times. 4 times before eventually breaking through. Okay, this was our line of resistance. This is the line of defense. And then we finally saw price breakthrough. So what I would do is I would set up an alert once I have established a particular line of resistance. And once price breaks through and closes above it, significantly closes above it, I would then be notified, right? And then I would go back and see what was the last bearish candle before price broke through the area of resistance impulsively. And when I say impulsively, ideally I would like to see it within 3 candles. The perfect setup for me would be within 1 candle, 1 or 2 candles. That would be great. So we are looking at this region on the chart, and we can see price broke through within 3 candles. That's great. We have established and identified our previous bearish candle before the impulsive move upwards. So let's go ahead and highlight that candle, and for that we can use our parallel channel tool right here. All right, so we have highlighted this candle from the top of the wick to the bottom of the wick. Now this candle itself will be known as the order block candle. All right, so now that we have identified our order block candle and we have seen price break through this previous zone of resistance, you know what, let's do this just for the newbies out there. This helps. Resistance. This was our line of resistance. All right, and this is our order block candle. Order block candle, OB candle. Okay, great. There we go. Okay, we have identified it, right? So what do we wait then to see? We want to see price retrace back into this order block candle zone, right, before continuing its way upwards. Now, how do I like to trade it? I like to see price retrace back into the order block zone and pierce the middle, the 50% mark of the parallel channel. Now we can see price tried to do this a couple of times before it actually succeeded. Right? Now this candle did form on the 20th of January and it is the 4-hour time frame. So I knew that it could take some time before price retraced fully. This area right here could have been an entry for those of you that would not use the 50% mark of the candle. And this area right here could have done the same thing. Both times would have been a successful trade depending where you place your stop and depending what your RR is and depending where you place your target, right? However, for me, I like to see the candle touch the halfway mark. And yesterday, my time, we saw just that. We saw price retrace back into the order block zone, wick through the 50% mark before carrying on its way north. All right? So this was my entry. I set up a pending limit order, and I set this up already when I saw this zone back on the 20th of January. Once I saw price break this previous area of resistance, my limit order was set up and waiting. And what did we see finally yesterday on the 1st of Feb, which is around 12 days later? We saw price retrace and enter into my long position. What I would then do is I would place my stop loss a couple of pips below the bottommost wick of the order block candle itself. Once I have established that, and this is all predetermined, guys, so I already know where my stop loss is once I have my order block candle. And I also already know where my target is. Now, there are guys that trade smart money concept trading using these sorts of order blocks, but they look for much higher risk to rewards. They look for risk to rewards of 1 to 5, 1 to 8, 1 to 10, 1 to 15, 1 to 20. For me, myself, I am a conservative trader. I look for a risk to reward of 1 to 2. That is all I need for myself to get in and out of the trade, and we can see we got that exactly. My limit order is set up, my target is already decided, my stop loss is predetermined, everything is in action, so I don't have to worry about managing this type of trade because it is on the 4-hour time frame. Right? So this is more of how would we swing order blocks on a higher time frame, because you could do the same thing on the 1-minute time frame, but you would not be able to set and forget that sort of thing. You would have to be on the charts watching the whole time and managing that trade as it opens up. All right, but for this type of setup, because it is the 4-hour time frame, we have a little bit more leeway and we can just set up our targets, our areas of interest, and we can just walk away, right? And that is exactly what happened. We had a great trade. We had a 1 to 2 RR. The candle came right down. It didn't exactly touch our stop loss. It wicked to the bottom of the previous order block candle, and that is what I like to see. So to wrap up this video, what do we need to look for? We need to look for areas of resistance, and then we need to see price impulsively break the area of resistance. Ideally, we would like to see price break the area of resistance within 1 to 2 candles, 3 at the most. But if the candles are small and it sort of meanders its way through resistance, I wouldn't call that an impulsive break. We need impulsive breaks to be literally what they are called, an impulsive break. We need to break through that area with conviction and confidence in order to confirm that it is a break of previous resistance. How do we establish resistance? We need to see an area on the chart where price is struggling to break through. at least 3 to 4 taps on the chart. Then we can officially say that is some sort of resistance. Once price breaks through it, we look back and we see what is our previous most bearish candle before the impulsive move upwards. We highlight the candle from top to bottom, we extend out the channel, and we wait for price to come back into the channel, in which case our entry would occur. And now you get to choose when do you want your entry to be triggered. Do you want to enter maybe higher up in the channel, maybe lower down in the channel, maybe at the very bottom of the channel? That could give you a much higher RR. However, this would come down to you backtesting this sort of setup and seeing how many times the price would come all the way back down to the bottom of the order block channel, or would you be happy with perhaps entering on higher in the channel? How many times would that happen? Where would you place your target then? Would you use previous price resistance? You know, these are all things that you have to play with. So play with the idea, back test it, and see if it's something that could work for you. So that was a winner. And those of you that follow the channel know that I change the order block channel from yellow to green once we have a winner. And in that way, I know that when I come back, I can analyze, I take a screenshot, and I know that this was a successful trade. What are we looking for right now? While we are here on the chart, we clearly are seeing another area of resistance, right? And that is right here. Here is our zone of resistance. We are having multiple taps. We are having price wicking and coming below it, sort of closing, not impulsively. Look at the size of the candle. This is not an impulsive break, right? The candles are small. We still have wicks to the left. We have not broken that region. We have simply sat above it for a little bit and come below it. Come back again, wick into the zone and come below it. So this would be our next area of interest to watch out for. So what would I do? I would set an alert, and once price has closed above it, I would then come back and analyze the chart. Was the break impulsive? If the break was impulsive, I would then look left and try and identify a specific order block, the most bearish candle before the impulsive break upwards. And that, guys, is simply how I trade order blocks on Euro USD in the 4-hour time frame. The same goes for GU. Right, now this chart is covered in lots of different colors. The colors, for those of you that have been following the channel, know that the yellow zones are areas which I'm still waiting for price to retrace into. The green blocks are winning positions and the pink blocks are losers. Yes, you can currently see we are in drawdown on GU on the 4-hour time frame in this specific order block right here. So we are going to wait to see what happens. Price tried to wick down, missed my stop loss by a couple of pips, which is great. Well, it's not a couple of pips, it's a bit more than that. This is the 4-hour time frame, and we are waiting to see whether price is going to continue upwards, because we are clearly ranging. Right now in the 4-hour time frame on GU, we are ranging between support, resistance, resistance, support, support, resistance, support. So the order block is based close to the support zone of this range, and I liked the setup. Right here was the impulsive break. It took out this area for me right over there. This zone right over here. The impulsive break was one candle. Right, and I waited for price to retrace. All right, guys, so on that note, let's wrap up today's video. I hope you all enjoyed. If you found this information helpful or valuable, please would you go ahead, hit that like button, hit that subscribe button. If you have any questions, please leave them for me in the comments. I will be sure to get back to you. And as always, thank you so much for watching, and I will be seeing you all in the next one.